What's up, traders? Welcome to another C-Space trading video. As always, welcome my subscribers. And also, if you hadn't checked out my Facebook community, I just set up yesterday, so it's fairly new, but I plan on posting my videos to it. Check out my community I set up, C_Space Trading Community. The link is in the description of this video, so check it out and go subscribe if you're a subscriber and you want to follow along with the community so we can all kind of come together and speak about the trades and the stocks we're watching, or if you got any questions, it's a great place to ask. So what I want to do with this one's a little different. I want to kind of show you a technique. I'm sure you've all heard of the bull flag or a bull pennant. This is actually a bear pennant or a bear flag. I'm going to call it a pennant because it's got more of a wedge effect to it, not really a flag. And you'll see here in a minute why. So this is the hourly chart on the SPY today. And you have this shooting star here as it kind of ran up and then kind of pushed down really strong. Then you had this strong fall that went from roughly 286.40 all the way down to 285.45. So let's drill in a little bit because it's difficult to see on the hourly, but on the 15 you see this flagpole here, upside down flagpole, kind of pushing down with this hammer at the bottom. This hammer is critical as it's sitting around 285.50, around that ballpark. And also what I have below here is the volume, and I have my options because I trade SPY options. I try to do it daily if I see the right setup. So this is the trade I made with a 286 strike with a put expiring tomorrow on August 24th. So that's just to set this trade up and kind of let you know where we stand. Alright, so as this thing bottomed out here, it kind of came up and made a high here of 286.16. Actually, I'll give you the right number, 286.14, and then dipped, came up, and then it did go up to 286.15 here, but that is it. So it touched this, so basically have a double top here, and let's draw some lines so it's a little bit more clear. So you have this line here. So you kind of got the top, or the top of this pennant, or if you flip it upside down, bottom of the pennant, however you want to say it. And then what you have here is, let's say, even delve into the 5. So you have this here, and you touch on all these pivot points it continues to bounce off of. And I'll be honest with you, I started drawing this out around here. Once I seen it came down, because it was too early to make this connection yet, but once it came back down here and it came up and then came down and touched this area and went back up, now all of a sudden you've got a trend here. It keeps bouncing off this line. So I drew this long line out and wondered where it could end, with knowing that 4 o'clock here, the end of the trade day was coming. So I just kind of kept an eye on it, and it did go back up and touched, came down and then touched. So I knew it was starting to get very tight. When it starts getting tight and at the end of this wedge here, or the end of this pennant, it's going to explode one way or another. The tendency for these flags off a downward trend is to go down. And if this was in the opposite direction, the trend would be to go up. So just be cautious of the trend. If this thing fell here and it's bouncing along creating a flag, you're most likely going to see it fall down. That's why I had this 286 put up ready to go. But I did not want to enter this trade until I have a confirmation. A lot of times I've entered here thinking, well, let's say I've entered here thinking this is where it was starting to get weak, and it turned out to run up strong. And with expiring options, you've got to worry about the time decay, and as this clock is ticking, you're losing money. So the longer you're in it, the more of a drop you've got to have. So you kind of want to get into these expiring options and get out as quickly as possible. So as you see, we came up, touched the top a couple times on this 5-minute chart, and then finally here at the end of the day, you notice how this volume here stays under the average. I've got the 50 mark moving average here. It stays under this average, means that volume is decreasing. It's below the average. However, if you notice here in this area, volume starts to uptick. Even though it goes up, you've got a shooting star here, which was a bearish sign. But the volume actually is starting to touch this averaging again, and then here it shoots above the average when it actually pushed below. And I was watching on the minute chart, and as you see in the minute chart, volume shot up, especially here, but that was actually past the break. So I watched it come down and tone down again, and then when it made this sharp fall, the volume was right on spot on that 5-minute chart. And then when it kind of came back and touched this line and then was resistant, it didn't want to go back over that line and came back down. That was my end as it was about to go to this next candle. So as this minute was expiring, I was buying my my put at that point. So this put here would have been here, which was around 61 or so. So if you got in at 61 cent, and then if it don't matter if you bought one contract at 61 cent would have been $61. 10 contracts would have been 610. 100 contracts, $6,100. However you want to play it, whatever kind of money you've got, it doesn't matter. However, the advantage of having more contracts is, yes, it costs you more in fees, but the greater the move, the more money you're going to make. So I'll explain a little bit more of that in just a minute. So when this thing started falling, it kind of came down, and I thought about getting out here. However, I'm in the green now, and I'm getting a little greedy. However, not until you see an actual reverse do you want to get out, because this thing could continue to fall. It was still at 340. We still had 20 minutes in a day. And knowing that everyone was watching this, and here it is at the end of the day traders are going to get out as well. I didn't want to get out until if I seen this thing start to kind of climb, which basically you want to see it kind of pop higher than this candlestick here, and even pop this 9 EMA. It usually follows along this 9 EMA. So I stayed in it. Luckily I did, because it fell again sharp, and it continued to fall. Now, when I recall, this thing fell at one point. Let's see, let me back up a little bit here, down to that around that 285.50 range, actually 285.43. So also a mental note that I speak into a lot of my videos: be cautious of that 75 cent marker, and be very cautious of that 50 cent marker and your even dollar marker at 286, 285. Usually that's where you're going to find a little bit of support or resistance. That's why you have a little bit of support here, but it didn't hold and fell. And my out here at 246 or 346 was going to be here at the 50. That was my plan the whole time. Once this thing started falling, once we got close to 285.50, I was getting out. I didn't care what else it did. I was happy with the money I was going to make. So once it got down to 285, I think 54 is when I got out. So it would have happened probably early. It was so 82 cent is when I got out. But say you would have rode it all the way down to say 86 cent, it would have been a 25 cent per contract profit. So if you'd bought one contract at $61, you'd have $15 in fees, which sucks ass. However, you made $25. Take the 15 bucks, you made $10 in a matter of, what's that, 10 minutes, which is a 15% gain. 15% gain in 10 minutes is not bad. Say you had a little more money to deal with, you bought 10 contracts, your fees would have been roughly $29 depending on who your broker is. So you'd have had $680 invested. You'd have made 25 cent a contract, so $250, $220, just doing quick math, would have been your profit for approximately 35% gain. So guys, these expiring options are great, but they're very dangerous. You've got to have a setup, have a plan, and execute that plan. If I would have got in here and this thing would have took off and went higher than this candle, that was my out. This candlestick here, if it would have pushed higher, that would have showed me there was a little bit more buyers coming in and pushing this thing higher, possibly going back into this wedge. And here at the end of the day, I didn't want to sit around and wait and see what happened. So when you are playing these flags, pay attention to the volume. Go back to the 5-minute. Pay attention to that volume kind of increasing, and pay attention to which way it fell. If it fell here, good possibility it's going to fall out. If this thing was rising, been a good reason for it to go up. But since it did fall, I was prepared for the short, and once it broke, and once I got confirmation here that it wasn't getting back in, I went in, made a little cash late in the day, and I was happy. So guys, I hope you learned a little something. If you did like the video, comment if you have any questions. Go to that Facebook community page I just set up. Go ahead and subscribe. Subscribe to the channel and follow along, as I plan on posting a lot more of these videos. As always, I appreciate the follow along and the viewing. And guys, I will speak with you later. See ya.